Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in today's free video I am stepping in for John. He was not able to get to the free content tonight, but I had some ideas I wanted to share with you guys anyway, so it looks like it worked out okay. The first place that I'm going to start is with the trade that's working out. So in the chat room for a couple of weeks now we've been discussing the idea of Chipotle moving down into 600 for the June expiration, and a couple of ways we could try to take advantage of that. The way we opted to do it was just a very basic broken wing butterfly that tries to center this around 600. Now that we've hit it, the primary thing that we would like to see is that basically that just time marches on, which is always a pretty safe bet, and that overall we can remain delta neutral. So that has worked out great. That's exactly what you're looking for with those types of butterflies. Where might we find some more of those? Well, there's two places to look, and the first one is essentially the inverse of what I did with Chipotle, and it's more of an idea than I can really vouch for it as being an excellent setup. Now when I come back and look at Google, this is working from the idea that we can move into 550 by Friday's expiration. Granted, as we're sitting here below the 21 EMA and everything else, it's not really stellar, but when I look at it and see we have no more than $5 to head up into that zone, Google's expected move is very much within that. It's expecting to move about $7. And then when we look at this butterfly here, all we're trying to do is land this back up to the buy side. Now you could break a wing in this and do a deeper in the money call, which would give you no upside risk, but I would rather look at it for a little bit cheaper position and just saying, if it doesn't work out, okay, I know what my risk is. If it does the risk reward make sense? So as I look at this butterfly, the 545, 550, 555 is trading for around $1. If you could pick that up at $1, that just means that Google needs to advance $1.13 to get to your break-even zone, and then anything above that, provided you don't exceed 554, is still a good move. So that's a trade that I'll be looking at, as always, ahead of the Fed. Who knows what's going to happen, so the way that I'm going to try to do it is let those announcements come out, make sure they don't do anything that's completely out of line for the market, and then see if I can get that Google fly anywhere near the dollar. Another place that you may want to look, and this is a third way to think about these butterflies, so we've shown a bearish, a bullish, and this is one that I think you can approach from a bit more of a neutral stance. You've got CVX, where we are trading at $100.04 as of Tuesday's close. You've got a huge amount of open interest here on the put side. I don't look at these to necessarily be pinning plays. I'm not even trying to vouch for the idea that the 100s will expire worthless. They very well may, which if that's the case, I like looking at the idea of doing something like an unbalanced butterfly. I typically would widen these out a bit to try to give yourself a little bit better range of profitability. These are a little pricey, but that concept is one you could tie in with it. A little bit more basic way of looking at it would be to sell, and I always do this by doing, you can go to Iron Condor, and then just set this up so that the body of each one matches. So I'm selling the $100 call, I'm selling the $100 put. Let's look at doing this $3 wide, and that's going for their, about $1.25 credit. So I like to try to get those at a third of the width of the strike. So paying $1 if I can, $1.25 isn't too far-fetched. And then of course the idea is that by this Friday, we're looking at CVX still trading very close to 100, and the premium of these has been sucked out of those positions. So those are a couple things to think about into Friday's expiration. I also want to make you guys aware of tonight's webinar, so if you can catch this before we get the broadcast started, this is going to be tonight, Tuesday, June 16th at 8 p.m. Eastern. Covered some of the topics with you guys in last night's free video, just what John's going to be looking to cover, and that is going to be happening tonight on Tuesday. So if you get this prior to the webinar and haven't heard about it yet, we hope to see you there. Otherwise, I will touch base with you guys at the next free video.